This is a market review, and I think it can help you if you give attention to it. All right. Beginning of April, we had beginning of April around here. This for GBP USD. You can also apply to whichever pair you trade. So it can help you. At the beginning of April, we had it around here. So let's just mark this zone as the beginning of April, and then we have 2 weeks gone in April. So this first week, and then we have the second week around it. So we're going to mark the second week out also. So I call it started here. This is Monday. So I'm going to change the color so that you can notice the difference. I think the second week started here. Yes, this is Monday. Now I'm going to be explaining what made me to make some decisions on my entries, and how I took advantage of impulsive move and the correctional movement of candles to take entry. All right, if you look at before April, you will discover that there was also an impulsive move that happened around this area. It isn't obvious, but I think we could learn from it. It started from here. I think it started from below, and then if you look at it, it stopped around here. Yeah. I call it some irregular move that happened, and from what I state as a law that I've been using is that when you have a candle like this, a massive move of a candle, which is an impulsive candle, and you have most of it appears like 3 times or so. Sometimes it comes in with some market consolidation or argument at the middle. Once you have something like this, what I do is that I mark out the base of each of the candle and make it a key level. Now, this is what I believe that will always happen when I have such kind of movement. Sometimes it may not be perfect like this, but I will draw the other way around. Sometimes it may not be perfect like this, but most often price will always want to correct itself down to this point. So this base of the second candle before any further movement upward. Now, so put that in mind. We're going to apply that. So sometimes you have it like this. Then sometimes you have what's it called? Consolidation around it. Maybe you have an impulsive candle move like this. Then you have maybe some small candles around here. You have another small candle around here, maybe around here. Then you have another impulsive move. I don't know if you're getting me. You have another impulsive candle. Then maybe you have some other small candles around here. Some other small candle around here. That does not still change the fact that this is an impulsive move. Then you finally have something like this. What you should do is I should mark out this key area. This is one. You have another one here, because price will always react back to this point. So if I'm going to take a trade, I wait for a correction to come to at least 50% of the candle, like here. If I'm going to take an entry, I'll allow it to come to a 50% of the candle, and then we will take an entry down to this point. So this is how I've taken advantage of an impulsive move or impulsive candles with the correction candles. So we're going to apply this same rule and see why I called out some entries. They are all on Twitter, some are on my Discord group, and we're going to see why I made that kind of move. Now, if you look at this, okay, I told you that there was an impulsive move before April. All right, I just hope these colors are not confusing. All right, this was before April. If you watch, you will see that there was a massive candle. We had some consolidation, like I told you. We also had a massive candle consolidation. We had the massive candle and all that. So what I do is this: from where the impulsive candle starts, I mark out the base of the second candle. So this is the second candle I will call. So I mark out the base. Let me change the color to black so that it's obvious. I don't know. let's trigger. Let's see. I think we should keep it as red. All right. If you watch very carefully, you will see that when price wanted to correct itself, which is from here, when price wanted to correct itself, it came back to that second point. So if I'm not taking my entry from here, maybe from this rejection point, which is the high for that week, what I would do is this: I would take my entry from here. Yeah, this is like a massive impulsive candle before all of this correction reaction that started happening. So I'll take my entry from here, and then I will place my my stop loss just a bit above it, so that we know that all the noise from the market does not affect it. So this was what guided the sell we had before April. All right, so now we're going to still apply it to this point also. Now take note that we had a high here, which was before April, and then so in respecting my movement, I will also take note of this high that will happen. Okay, back to what we're saying. Now remember, I told you it will always come back to that second base before the move. Now in taking that move, I will also take cognizance of my key level, which is also this high that was produced. So I took a buy from here that produced it up to this point. Now when it got to this point, remember, this becomes our resistance, this becomes our support, right? Good. Now when we got to this point, we saw that we had a break to the upside. But one thing I took note of again was an impulsive move. The way the market moved up was impulsive. Watch, this is market moving up. So I saw it as an impulsive move, and so since it's an impulsive move, I started marking out again the areas. I'm just going to remove all of this so that the chart can be clear a bit. All right, good. I saw it again as an impulsive move, so I marked out my key areas. Remember, I mark out the base. That's what I do. I mark out the base, not minding the weak rejection, because weak rejections is also very important. I mark out the base, and so I'm just going to change this to black color, to a darker color, so that it can be different. This is how I trade. So I marked out the base, and then if you watch, market took a correction. Now most of them, we may not catch it from the top, but I told you that I always catch it at the 50% point of the candle. So we can say we have from here, that we have here, or rather let's use this, we have here as a 50% point, right? So if you take yourself from here, I posted this also where I was very sure about market selling, and then at that point a lot of people were expecting a continuation of the buy side. Now I posted it that it was going to touch this point. That's what I was looking at. Remember, you set your stop loss not because of you are doing 30 or 50 pips. You set your stop loss in such a way that you know that price will not come to hit it. So I put my stop loss away from the noise, and then this was what propelled it. Now if you watch, the market took a correction and then came close to this point, but it didn't touch it. So that is also another candle communication, that since it didn't touch it, this has become a base also. It didn't touch it, and then we had a reversal. We had a reversal to the upside. Now just follow me very carefully so that you get to understand what I'm saying. We had a reversal to the upside. I'm just going to mark this point so that you get to see it. It didn't come to this base, right? Now every trader would not want to take the entry. They'll feel like, okay, this market will want to have a retest to this point before going. But unfortunately, you're not the owner of the market. The market react the way it wants to react, in as much as it follows structure. So sometimes the market might not come to this point before a reversal. Now, if I'm going to take an entry, I'm not going to take an entry immediately the turn, because I was expecting it to come to this point before taking any new entry. And most often I take my profit even before the key level. So profit was taken, and I was waiting for it to likely to come to this base, and then we'll have a reversal, but it didn't happen. So if it didn't happen, and you already see that the buy pressure is already high, where should I take an entry? I will take it at the 50% level of this bear candle. Remember, 50% bear. And now if you watch, you will see that this is also a key level. We had a key level around here, so it's actually coming to respect this key level. We had one key level around there. We'll just change it to black, to yellow, so that you see it. We had a key level around there, so I will be able to place my candle, my entry around here, and say, okay, I will go for a long, since it's already evident that buy has taken over. So we placed a long around here, and then that's how we were able to catch this move. Now, I know we have intertrading, where we use DXY. My friend was the one who actually brought my idea to it. Mr. Lawrence is on Twitter also. You can find him, Do Lawrence. You see him, is on Twitter. And then we took a buy from this point. And then we got to this point. Now, remember, I told you I was taking advantage of impulsive move. All right, good. Now, so it was the impulsive move that I took advantage of that made me to know that there was going to be a buy, but I wasn't expecting it to happen so quick. I was expecting to touch here, just as we did in the previous one. Expecting to touch here before a reversal, but this is a communication that since it didn't touch here, market will have to come back and test that point. Yes, market will have to come back and test that point. So when I saw that price had come to this high for the beginning of the month, I believe that's the beginning of the month. All right, so yes, check the date. That's like the Tuesday of that month. So still quite like the beginning of the month. So since I marked out this point as the high, I'm going to change the color. So since I marked out this point as the high, I expected that if price will still come back here, then whatever we were going to be having would only sweep liquidity from this buy side, and then we'll have a fall. So that was why on Friday, yes, which was yesterday, I posted on my group that we should take an entry, a sell that happened. We take an entry, take a sell that happened, and then that was how we were able to catch this, because I'm still expecting. So I'm expecting price to come to this point. You see this point here? I'm expecting price to come to this point before anything called a buy will happen. So whatever we're seeing is just a pullback and all that. So back to I don't just trade like this. Now, I also understand what is called support and resistance at the long run. Now, if you look at this point, you will see. So I'm just going to delete all of this so that we get to see something on a larger scale. You see why I'm saying that price will have to come down. Now, what I do is that I change it to a line graph. Now, if I change to a line graph, if I'm picking from this point upward, I'm putting it on an angle. I'm not taking it to go and meet it. I'm putting it on an angle, saying that if we have something like this, if we change it to this, remember, it has to be at a particular angle. You're not just dragging it to go and meet something. No, you put it on an angle, knowing that okay, price should be able to come and react to this. This is one. Then I look at what has happened before that time, which is here, and then I also try to mark it out. This is 2. What? Perfect angle, giving it an angle. Now, there are 2 things that can happen here. Price can come and break here before going up. That is one. Price can come back to this point, break here before going up too. Now this is what is guiding me to know that okay, price is still going to sell further in the new week before any possible buy to the upside. So these are just few things that I do. Now I always advise people to learn how to expand their chart. It gives you, it kind of helps you to know how candle is behaving. You understand? Now if you look at this, if I was coming into the chart just maybe in the morning or maybe a new week without knowing really what has happened in the market, the first thing I want to do when I come is to mark out the high. So the high that was created last week was this, and then we had a low that was created obviously around this area. So the next thing I want to do is I want to look at other possible key levels that we had before that time. We'll see that we had one around here and then we had one around here. Good. So I mark out those possible parts, which is here. We had a weak rejection around here. So I changed the color because they are actually secondary. So the primary are those ones in front. So we have here. So the next question that I want to come to my mind will be, would this market turn from this point, or would this market want to test here and test here before any further movement? You understand? Now if I'm looking at this market, I will see that there is also an impulsive candle. There's an impulsive candle. We have from here, from here downward. Now I told you impulsive candle will always happen like about 3 times. So I don't call this at the middle impulsive candle because yes, an impulsive candle are full bodied candle. So I'll be expecting that another candle, or maybe yes, another candle should happen either to this side or maybe like this. Let's fill it with black so that we know that this is a bear candle. I think let's change something to why it's supposed to be dark, very dark. All right, okay, good. Now see if you watch. So I'm expecting that okay, if this is an impulsive candle, then we have it around here. So I'm expecting price to fall to this point maybe next week, Monday or Tuesday, before any movement upward. Is that okay? So if I want to make a target, I will make a target. I will mark my key levels. This is 1. We'll have another one here. It's already marked 2, and then we'll have another one here. So if market would want to have a correction, market will have a correction first to this point, maybe a retracement, second to this point. And so if price decides to break this point and goes up, then we'll know that we are having a new zone. So this is just how I trade. I really don't know how to paint it to you, but this is how I trade, applying the impulsive candle and correction movement. So with this, you can make some good money or good profits or good peeps in the market. Thank you. Please do it to go through the video again so that you will be able to comprehend a few things. All right. Thank you.